Good morning and welcome to Trading with Larry. I'm joined every day, actually 4 days a week. Then I'm on solo on Friday where people can write in, ask me questions. I'm joined by Eric Shamalov. Good morning, Eric, and happy to be here after a nice, relaxing weekend after a crazy week last week. Market probably ended 5% higher from the lows it made Sunday night off of the one-day bombing of Iran and then the ceasefire, etc. And it's funny, really. I spent a little time this weekend reflecting on this week, this quarter, and then stuff just in general. And my takeaway is there's an insatiable appetite to be long. Nobody cares about market cap, valuation, or pretty much anything out there. And the retail public, as you've been stating for a few months now, has been long at higher levels. But believe it or not, now those higher levels are 5 to 7% higher. So everybody that bought in what you think is the 58, 59 area is now up 7% in basically less than a couple of weeks or a month. So everybody's up a lot of money. Everybody's winning. Things are priced for success. I want to talk a little bit about Friday. It's interesting. So Friday was the big Russell rebalance for the end of the quarter, and they moved stocks crazy. Like Goldman moved 20 points on the close, Palantir 13. Like they just whipped these stocks around crazy. Amazon, all these big names moved like crazy. And it was a pretty wild day. And the S&P, which really isn't that big a deal, but people aren't used to it, sold off like midday, like 60 points off another fake headline. I mean, they just throw fake headline after what was it? The Canadian
Yeah.
tax
So
processing, whatever it was. I mean, it's unbelievable. Trump's like, I'm not talking to them, and then like a day later, they take it off. They take the tax fee off, and I'm sure they're going to talk and somehow do a deal before the in the next week or so. They're going to have like 18 deals done in the next week. So, the market, in my mind, is priced for full perfection here. Full, not even a little perfection, full perfection. But it keeps going higher. It's making guys like me kind of look bad in the sense that I'm not shorting it and I haven't shorted it. I'm waiting and I'm still waiting. We remain short small positions, but it's frustrating not to give a trade for a few weeks or even a month, which is so outside the box of anything that I do because I'm usually trading almost every day, but I'm staying away from this mania. I'm waiting for, like, today to me could look interesting. End of the actual quarter, the reweighting was done, and if the market fails off of this, it's not really a failure because it's up so much. We're up some from the lows. We're up more than I think I've ever seen. I mean, we got to get touchdown Tommy to check to see from a low to a high in a period of 2 months, if it's ever gone up 37% or whatever we're up, which is maybe even more. I mean, this up move, believe it or not, is bigger than the market crash of 1987 in reverse. Now that happened in one day, but this is like a month and a half of a reverse crash. So this is an explosive up move with with in my mind mindless buying. I mean, mindless. It's a amazing thing, but you can't fight it. You got to sort of sit on the sideline, and it's the hardest thing to do. And we always talk about it, but the market it's just wild out there right now. It's wild. People are just taking excessive risk, and we talked about this, and I really think this is an important thing, and I've seen this from a lot of my friends that are very successful in business, don't do trading or investing for a living, but just keep holding stocks and holding them longer. But like they say, oh, I bought Nvidia at 90. If it gets to 130, I'm going to sell it. It gets to 130, they never sell. It goes back to 90, they don't sell. Goes to 150, they don't sell. So I don't believe anybody is calling their broker or their money manager and telling them to sell anything of any profits that they have on their page. So that worries me in itself. And I don't think, I know it sounds crazy. I don't think the story of the year has been written. And like I feel like I'm the guy in the town square. You can throw
Get
stuff at
off my,
me,
you're the get off
whatever.
my lawn guy.
Well, I'm saying, everyone's like, you stink. And, I've seen this in the hedge fund world in 2007, coming into 2008, where I had hundreds of people walk in my office and basically tell me, that I didn't know what I was doing and I was wrong and use VAR and everyone's using VAR analysis and this and that. And it blew up on them. Everything blew up on them. VAR was the biggest term before 2008. Everybody was using VAR. It's like, what if, it's running scenarios, but they never had the scenario of the financial crisis in. So I'm not calling that, obviously, but I just don't think the externals in the market match up to what's going on in the market. And that to me is a
But
scary.
when is that ever the case? When do externals ever really match up with
A
what the
lot.
market's
I
doing?
think for years and years. I mean, I always think it was. I mean,
I
listen,
never think it is. I always
well,
think the news is always worse than what the market is pricing in.
I'm not debating the news cycle. I'm just talking fundamentals and stock analysis and earnings and all of these things. Like we would look at the market, okay, of what. So right now the market's at an all-time high. Okay, the Dow didn't make an all-time high yet, but all the other indexes are at an all-time high. Okay, so the question is, like, what do you look at when you're at an all-time high? There's not a lot to look at, but like if I match up the world and what's going on to the market, something doesn't make sense here. I mean, it doesn't make sense. And I believe what I'm hearing from my friends that own businesses is that the the cycle is slowing big time, and we're not seeing it yet in the numbers in any way, but I think we may see that coming forward, and we'll have to respect that, and we're going to have to see what happens in here, with the market to me. I mean, listen, they ran the market on the close. What was interesting is one thing that you have when you're with the opportunistic trader is one thing that I really use is I use a lot of street information that a lot of people don't get, whether it's option trades. So I have a Bloomberg up all day and I'm seeing all the flows in every single stock and the market that's going on that only true, real professional traders are getting. So, that being said, I have that at my fingertips. And what was interesting is the market was selling off hard at the end of the day. The imbalance for Russell was stock for sale size, like 4 billion. That's a big imbalance, usually over a billion. We look at it, but whatever. The imbalances which come out starting at 2 o'clock are usually not correct. So it was weird. They front ran that. And then all of a sudden, at the end of the day, stock came in to buy in size. And that imbalance went from 4 billion for sale to 2 billion to buy. And that's why the market ran up at the end of the day. Everybody was caught off sides. But my question to you is, like, the original headline that got the market moving lower was it's like, how do you believe that headline? That
You
that
don't.
well,
Please
what do you
tell
mean? It doesn't matter if you do or you don't. You lost 50 handles if you were long. You can't sit. I mean, only you can sit long for 50 handles. Most people can't sit long for 50 handles. So what I'm saying is you're saying you don't listen and you don't do, but you had to do. We actually had to stop in to positions and we did, and then we stopped back out on the way back up. But you have to, price is 99% of the law. Price is everything. So when you have a 50 handle down move, doesn't matter what you think and you think it's fake. It's not fake. You have to, listen, 50 handles, even though on a percentage basis is not a lot, as trading in intraday when, like I'm pricing stuff for tomorrow, the prices are so low and disrespectful to the market that it's unbelievable. I mean, if you put up the straddle today, it's probably zero. I mean, I have Thomas pricing some options for tomorrow, and there's nothing in it. So I don't know what's going on right now. The market is utterly complacent. They think nothing can happen. Um, you know, it's harder for things to happen right now because now what happened on Friday, it's hard for that to happen again because it happened once and people got burned. So they don't go to the fire. Like, it's just, market reacts to headlines. Positions are out there. The market is too tight. Volatility is too low. But what's interesting? I was looking at, and maybe I'm wrong on this, it might be August or September volatility is above 20. Look at, can you pull up the vol curve? I mean, it's got to be skewed to the upside right here. From
The
what I'm
vol
seeing.
curve. The vol curve looks as normal as can be.
Well, pull it up. I don't know how normal that is, but I'd like to see it. I don't know why.
What are you looking for in the vol curve?
What are you
It's
talking about? I want to know what front month
negative.
vol is versus 5 month vol. That's really what I'm looking at. Okay.
Vol for January or for December
Whatever.
21
Whatever.
and
It
22?
doesn't matter. Just whatever. 4 months from today. Okay. So vol right now is 16 in the front. And in the back, I think it's over 20, which is weird to me. Okay. I know you think that's normalized, but to me, that leads me to believe that the market may be no good here. Because I would think you would see a flat vol curve if the market was good. That's just my opinion. And you could even see an inverted curve if they're really bullish. But I don't see that. So I was looking. Can you pull it up, or you can't? You don't have it.
Yeah, I have it.
So
I'm
can you
just
pull it up? I'm just
usually when the vol curve is inverted, like you said, that's when the market is really afraid. This is steep contango right here. This tells me that they're kicking vol down the road and nobody's afraid. This is the natural state of the VIX curve, steep contango.
I understand, but there were times, obviously, when the market's selling off that will even go inverted
Well,
the other way.
invert. Yeah. Yeah.
Right. So right now the market is extremely complacent, and I think vol is probably a buy shorter dated. Maybe you buy August vol and you sell year end vol, something like that. I mean, I don't know. I mean,
Here's the
is that
cash VIX. If you want to take a look, here's the
right?
cash
Right.
VIX.
Now that's my question to you. Look at why is cash VIX with the S&P up 20 handles up basically almost a point, which is like 3 to 5%. Like I'm not understanding.
Larry, you never like to look at the VIX much, right? When I notice a lot of these divergences, you're like,
Yeah,
you
they
got
don't
to
work.
stop here.
They
VIX.
don't
Why are
work.
you looking at the
Well, they
VIX?
don't work. They don't work for what I do. Maybe they work for what you do. My stuff is within inside of 2 to 3 days that I want to, put positions on and have them work. So when I'm looking at VIX this morning, and this used to work 5 years ago, okay, 3 years ago, 6 years ago, if I saw VIX up this morning, I would short tons of futures right now. Tons. I would be so short that I couldn't see straight. Okay, because something doesn't make sense. Why would VIX be up with the market up? But it's a fake clue. They're throwing you the little tidbit that used to work that doesn't work. So we look at it, we respect it, but we certainly don't trade off it. Can't trade off it. It's just like, to me, the market is a 10-star short. Then if why is VIX up so much today? I mean, listen, I think today there may be stock coming for sale on the close to wrap up the quarter. I think positions like, listen, if you own Palantir, the stock is up 40% for the quarter. You now have to be a net seller because your positions are 40% bigger than what they were before. So this is the reweighting, so you're going to get, you had it on Friday, but you're going to get more reweighting of people needing to take down winners and put on positions that haven't been working as much for the quarter to diversify out of their holding so much of one position. So I think you'll see some stuff, but that clue
By
used
the
to
way,
work.
Larry, the VIX futures, like the July futures, August futures, they're all down today. It's just the spot that is up, the cash VIX that's up.
Okay, but I'm trying to figure out why. I don't know why. Why would that be up? I mean, maybe I don't know. I don't know if you know what I'd be interested to know. Maybe today is an expiration in the product, so that could be it. And then they mark up the position and then
Yeah,
they cash it out. So I would think maybe today is an expiration. So if it is, I wouldn't pay much attention to it. But if it isn't, it really
it is
leads
not.
me
No,
into
it is not.
Okay, so it leads me into a clue that the market is going to sell off today. That's just my opinion. Okay, just off of that. Okay, I know you're saying back month are down. I don't think they could be down all that much. I mean, what are they down? What's
Not that
August VIX?
that's the front. I'm just saying the futures, the front futures are down. The cash is up. So
Yeah, I don't know. I don't know. I look at that VIX and it just gives me a clue to want to be short, but not like I used to be. Trades are starting to move here. The TLT is out. I'm actually long TLT for my product, and I like it here. I don't know where we go, but it just seems to me that they want to take bond yields lower. Again, you know, we're still at 4.25, so I don't think it goes very far until they make a rate move, which may happen on July 30th. Um, I'm leaning towards it will happen. I don't know what they're pricing the percentage in, but I think that that's an interesting trade. I like this DAX US spread the reverse way now. Remember, like a week ago, I told you, or 2 weeks ago, I said I like being short the DAX, long US. I now like being long the DAX and short the US. So I would flip that position right here. I think there could be a trade there. Um, I know this hurts your heart, but I think gold goes lower. It hit the lower end of the range last night and overnight trade and bounced about $40. It's up like $10, not doing much. But, I think,
but that was a pretty good buy off the dip. Yet again, I don't know. Maybe
what's
the dip
buy
that you're
off
going to
is
have
buy
had
off
on
the dip?
Friday, and that was it.
Well, what's buy off the dip? Like, I don't know. I mean, how much of a dip? It's still dipping. It's at 32.87. It's on these are lower bounds of the move. We've discussed this multiple times between 3,200 and 30, which I think will be the all-time high. And I'll feather up and tout that was the blow off top that you don't believe. Um, Even if it comes in 700 points, you'll
What do you
still say it
mean?
wasn't.
That blow off top was rendered ineffective because we made a new all time high. I think
No,
on the closing print. What do you mean on June 13th? Yeah,
no,
we
no.
did.
That was
Okay,
the
all
day.
right, all right.
Whatever. It doesn't matter. We're not going to argue it. It's Monday. It's
There's
too
nothing to
early to
argue.
get in an argument. So I say blow up top. I don't like gold here. Kind of like oil. No trade though. Bonds look interesting. Um, I've been doing a little bit of channel checking with people that I know, and things seem very, very slow. They seem slow on the real estate side, they seem slow on the business cycle side, and I think we can run into a little bit of trouble here. Um,
But
you
in the
know,
back of your mind, you're fighting this, Larry. You're fighting the market. You
I
know,
am not fighting the market. How
In
do
the
you say
back
I'm
of your
fighting the
mind, you
market?
got to be thinking
How
this
am I time
momentum.
out? How am I fighting? No, now I got to throw a time in.
Yeah,
How am I
let's throw the
fighting?
time
How
out.
am I fighting the market? I'm not fighting the market at all.
News
I'm
looks
just not.
bad.
I'm
The
not
market's
long.
not
I'm not
going
fighting it.
down.
Eric, fighting. Listen, I've worked with you long enough for you to know and watch you. Okay, if I was fighting the market, I'd have 19 shorts on or 10 shorts on, and I would be
And
in a
how many do
bunch
you
of
have on?
different areas. I'm
Dude,
in
I'm going to be
nothing.
like your psychiatrist today. How many do you have on?
What are you talking
How
about?
many shorts do you have on?
I have nothing. I have two put position. I have
So
two put.
to me,
You're not letting me
that
talk.
tells me that the fact that you're not short,
You're not letting me talk.
well, you probably, in the back of your mind, this momentum looks like it wants to carry forward all summer long.
Dude. And how much are you long there, mister? None. So I don't know. You've been, you know what? You have gold chains behind you of bull. You should have a gold bull, and you should be freaking money should be like dropping off your screen. So I feel like I'm doing a good job. Okay, I'm doing a bad job because I haven't gotten long in the last month and a half, really, but I'm doing a good job of not really losing, and my products are up other than one. Okay. But you've been bullish the whole move. I mean, if you didn't have it by now, you're never gonna have it. You might as well just freaking be done and leave the building. So,
Listen,
that
Friday was phenomenal because like, all the things that you're saying, you're waiting for the fake move. You have the Russell imbalance. If you're looking for that for the market to do something stupid, Friday was a perfect day. It took that big dip on a fake headline, and there was just nothing other than the
why
fake
was that a
headline,
fake
and you
but
just
why was
buy
that a
those
fake
calls.
why
It
was
was
that a fake headline? What was fake about the headline?
Larry. You even called the headline fake yourself earlier in the podcast.
I
Now it's not
called it
fake.
fake because they retracted it within a weekend. It wasn't fake at the moment. At the moment, it was a
So the market
true.
is you think the market is going to sell off on a Canada trade deal headline after the market
It did.
completely disregarded every single trade deal headline over the last 3 months,
It,
came all the way back from like 30% down. You think a small little Canada headline is going to get the market down
dude.
on a
You are. Let me
Friday?
tell you something. You're the strongest trader I know, dude. Nothing scares you, bro. Just like when you loved Ethereum with no stop at 2750 and it went to 2000, dude. You got to respect the market. So when you say that was a fake move,
Yeah,
that
but
was
you only
not a fake.
respect the price when it's falling. When the market is up at highs, why can't you respect that too?
I do respect that. That's why I haven't added to the short. I mean, obviously, I've been coming on here telling you and telling people that are watching that I am not ready to short until I see the market turn down. So I'm fully respecting it. That's what a trader does. But when you come on this show with me and you say a 60 handle intraday move where touchdown T is freaking out, you know, we're blowing through stops left and right because we use stops. Okay, we're blowing through stops left and right. That you're saying it's a nothing move is mind blowing to me because anyone watching the show that's trading on a day over day
You got
basis.
scared on that down move, and you just got to buy these dips as long as nothing is blowing up. Fundamentally, this just looks like a one of those markets where bears are going to be tearing their hair out for months. You know what I'm talking
I fully disagree. I'm on this podcast fully disagreeing with you.
about. Okay.
Okay. Just like I said in gold, we are extremely close to the high of the year. Okay. I don't know if it's coming today. I don't know if yesterday was the high of the year or it's going to be in 3 days. This move at 6,300. Dude, I mean, we're talking about lunacy. This is lunatic land. We haven't had any type of correction, okay, from the low. This move has happened. What was the low? April what? April 16th, May 16th, June 16th. We're in 2.5 months or less. We've rallied 40%. You think that's rational and normal? It's a reverse crash.
I believe in what the founder of the efficient market hypothesis says. And listen to me again. It's momentum is an embarrassment to the theory of efficient markets. And this is a pure
You feel this.
textbook example. And guess what? That momentum, which is a huge force in the market, is going to propel things the way it looks right now all throughout the summer, just like it did in 2018. And then the final battle this year, you said the story's not going to be written. You're right. At the end of the year and the third quarter, fourth quarter, it's going to be Jay Powell against Donald Trump, just like it was in 2018, which is going to be very ironic because this is the last year of Powell's tenure. And that's going to make it even more must watch TV. But at the end of the day, it's going to come down to interest rates yet again. And the market is just being propelled by this invisible force of momentum, which is just going to continue.
Listen, you know what? I can't even do it. It's Monday. I literally just think what you're saying doesn't make sense.
Okay.
There's momentum in price. There's no momentum in volume. There's no momentum in anything. What has happened here to get us to where we are is guys like me who run some real money aren't shorting. Okay. I'm waiting. So the bottom line is my subscriber base is waiting. I'm waiting. Okay. For right now. And there's going to be a very big trade here. Okay. And, you're looking
100%.
at,
When?
oh,
When?
let me ask you a question. Where were you in 2000? I just want to know. You were definitely not in the market, but what were you like 12, 14? Where were you in 2000? I just want to know. Where
Your
were you?
point? What's the point?
The point is, I want to know where you were in 2000.
I was in school.
Okay,
I
you
was
were
in
in school.
school.
Okay, in 2000, I already had 16 years in the market, which is probably what you have in the market right now. I already had that experience. Okay, you haven't
Okay.
seen anything with what's gone on in
I've
markets.
seen some
Okay,
stuff.
I'm just letting you know, in 2000, I had guys just like you telling me why the internet and this and that, and this is different this time, and this and that. And
I'm not
you
saying
know
it's
what?
different. Actually,
It
I'm saying
worked.
the opposite. I'm saying it's exactly the same as it always is. I'm not saying it's different. I'm saying there's a force in the market that you really can't fight. And people
Nobody's fighting
want
it.
to
We're
disregard
waiting. We're
what?
waiting. We're waiting. I'm not, no one's fighting it, but I don't find it, like it's funny. You're calling bull market, bull market, bull market. And, I might need to see your trading sheets because you've been coming on here for weeks and weeks saying it's a bull market. So the
Okay.
bottom line is you don't even believe it because if you believed it, you'd be right now on your desk dancing like I
I am
used to.
dancing.
Okay.
Larry, I had a 10x on my options on Friday. You know that. Come
10x.
on. Come
Okay,
on.
whatever, dude. I don't even know
Come
what
on.
you got. All I'm telling you
You know what I
is
got.
this is not easy. Okay, this is not an easy market. It does go up. The last 4 or 5 days have been just straight up. That's a little bit easier, but almost in every day there's chop. And when are you going to pull the trigger? Okay, so we have our subscribers on. Everyone's watching right now. Okay, the market is up 20 S&P points, which isn't a lot. Okay, when are you pulling the trigger to get out if you're long? Like when? When it goes negative on the day? Like, or are you holding it no matter, like you said on Friday, no matter what what? How do you know the market
I
wouldn't have
didn't sit
dropped
through
another
that.
50
No,
on
no,
Friday?
hold on. I don't know what you're talking about or asking me, but
I'm
what are you
asking
asking me?
you
I don't understand.
for our
Are you
subscribers.
mad at me that I'm bullish?
I'm not mad at you
I
at
think you're
all. You
mad
can
that
do
I'm
anything
bullish.
you want.
Oh
What's your
my God.
level?
This is
What's your
exactly what
level?
I'm looking for. This is
What
a
is
symptom.
what
This
is
is
your
a
level?
symptom of when momentum markets take over. It's when
Okay,
bears
but
get
what
angry.
I dude, I'm not angry. I'm just trying to get people to understand since you're coming on my show, okay, and I appreciate it, okay, with all of the experience and all of what I've seen from my career, which makes me respectful of the market, what your levels are. Like you're like, I'm bullish, I'm bullish. Well, what gets you out of being bullish? You're gonna wait for it to go down 150 spool points? Like what, when do you get out of your long? And when, that's what I'm really looking for on this show, is to tell people levels of what, where to get out, how to trade it, what makes it efficient. And the truth is, listen, I'm not pleased, okay, that we missed this market move. And you want to know what? This is the truth. Because I've been in the market for so many years, it's very difficult for me to basically, hold on to a long for 20% or 15%. If I get a 10% move on a pure index in 3 or 5 days, that's an epic trade for me. Okay. I don't know what an epic trade for you is. What are you catching, the 40% move? I mean, we're traders. It's very, very difficult as a trader. Now, listen, in the newsletter business, there are guys that just stay long forever. Okay. And they watch the market go down 35%. They watch the market go up 40%. Legitimately, none of their customers can handle those type of moves, but they're okay with it. So the bottom line is, I don't know what the levels are that you're looking at. Like, I know we're going up forever. We're at 6,300, which is higher than anyone's estimate basically on the street. Okay. They're going to raise them now because they're higher than every estimate. When we were at 4,800, the high estimates were, Goldman was at like 5,400.
All
Okay.
right.
So,
So I'll share one indicator, one chart that I'm looking at, if
okay.
you don't mind. So this is a technical study that I use religiously. For every market that I trade, I use something called a volume profile. And what a volume profile pretty much does is, you can see all these bars here within the chart. It's looking at how much volume was traded at each price level. So this is how it was stacked up right before the drop on that Canada headline on Friday. You had your point of control all the way down here at 51.92. As the market is dropping on that headline, I'm already looking for this market to kind of hit that point of control and do something called a failed breakdown, right? That's when the market drops through a level, a big technical level, and fakes everyone out, comes right back through it. And that's exactly what it did. You have the headline, it hits that point of control, dips back below it. As soon as the ES futures comes right back above that red line, that was a green light for me to start going long into the close. So that's a tool that I use. That was a tool that I used
Yeah,
on
but how do
Friday.
you, right? But
Market.
where do you buy? And the question
I
is,
just told you where,
but
right at
how
that,
do you,
as
but
it
how do
crossed
you
back above
know?
the
Listen,
61.92.
I understand. But the bottom line is, Friday happened for one reason, okay? Because the market on close imbalance shifted. I mean, I don't even know if you look at that kind of stuff, but literally the market on close imbalance went from 4 billion for sale to 2.5 billion to buy. And what they did, I used to be a specialist on the floor, and I used to make markets in individual stocks and options. Used to have guys like me there. Now you have algorithmic computers, and the algorithmic computer just goes along with the imbalances. So it created a vortex of sellers that turned buyer, and then people were scrambling to get positions back. But listen, I know you're brave and whatever, and you could buy
I don't
down
think
there.
there's anything brave about what I did. I,
Okay. Okay, whatever. I listen, I had very large positions on at that time, okay? And we were actually neutral the market because we got in front of that sell-off to get neutral. We had some downside puts on, okay? But I wasn't not scared. If that thing kept going down, it may have been a problem for us. So, we always, I'm not that confident. That's all I'm saying. I trade, I trade in a way where I'm defensive all the time and not that confident, and I hedge when I need to, and that's really how I do it for my products. And I think it's important for people out there to do the same thing. And it's a good thing you were confident, and it's a good thing it worked out. But what if it didn't work out? What if you bought eight
I would
nineties on
it would have
S&Ps?
lost a little bit on my 60 cent call options.
Okay. Well, listen, that's a great trade and probably a really good way to play it. I mean, that's like, you know what? That's like you going to your 7-Eleven and buying a lotto ticket. So,
That's
you
not a
know,
lotto ticket. That's not a lotto ticket. Don't call that a lotto ticket. Come on.
what do you call it?
What do you mean? What do you call it?
We
You
call
call it
that a lotto ticket in our
a fine
trading.
risk
The bottom
trade.
line, if you're
Lotto
buying a
ticket is
60, if
when you're
you're
gambling.
buying it,
It's not a gamble.
it's
The
100%
market
a
is
gamble.
going to bounce off dips. You got to be looking for it, and that
Oh,
was a dip that had all the whole technical setup. And
okay.
again, this is just the market will not let go of anything until it's forced to at this point. I don't see anything forcing it to get out and reverse course unless there's some sort of hiccup with the Fed, which I think is coming.
The Fed?
With the Fed, at
Listen to
the
me.
end of the day, it's going to be about the Fed. I
The
don't think
Fed
it's
is
going to be
cutting
about
rates,
tariffs.
dude. The Fed is cutting rates. That's what I'm telling you here on this show. July, they will cut rates. I asked you before. I don't know if you could pull it. What's the percentage? I'm
If they
telling
do,
you
damn.
that why if they do, they're
If they
gonna
do, then what do you think the market does? If they
sells
do,
off, sells off.
really?
Yeah, sells off.
Why would
'Cause
they cut rates in July?
because they want to be well because literally the entire world is cutting rates other than us. Everyone is cutting rates. There's not a country out there not cutting rates. Okay, everyone's cutting rates. Today's number, I don't know if you saw the number that came in Germany. They actually hit 2% inflation, so they're probably going to have the ability, depending on what the other countries are going to do, to cut as well. So I think you're going to see cuts, and I really truly believe we're going to have a cut. I don't know how bullish it is. Listen, there's probably only going to be two this year, maybe three, depending on. I think the market's a lot slower, and I think the jobs number you're going to see this week is going to be slow. I think it's going to be slow. So we're going to wait on that. Um,
There's
I
no economic news. There's no real economic news other than that jobs report on Thursday, right? And then we're going into the fourth.
I think yeah,
I mean,
exactly.
nothing that's going to move the market until Thursday.
Right. Well, listen, believe me, the market's going to move today. Okay. And, if you're with
What
my service, we get the market on close imbalance, which on days on quarter ends and month ends, they are very, very prevalent. So we'll have a good idea at about 3 o'clock what kind of imbalances there are and what kind of changes there are and what stocks are going to move. And we like, to play those names. So, I think today,
Look
is
at that.
really,
There's actually a 20% chance of a rate cut in July. It's
yeah,
crazy.
I'm buying that. I'm buying that. I'm actually buying that today. When touchdown Tommy gets back, we're gonna put
You
on
don't
a.
think there's a lag effect to the tariffs on inflation?
Oh, listen to me. I do, but I think he's gonna have to throw the towel into Trump at some point. I really do, and I think he's getting a lot of heat to cut rates.
He's going to be out of the office by the end of the year. It's
Maybe.
like it's like
How
when
do
you're
you
a
know?
senior in high school, you start doing whatever you want
But
because
how
you
do
know.
you know? But listen, honestly, how do you know? How do you know he's out? That's how do you know he's out? You know who put him in? Who put him in? Who
Yeah,
put him
Trump.
in?
Trump.
Right. So now if he starts doing what Trump wants, why would Trump make him leave? Now he's a soldier. Okay? He cut rates. If he cuts rates before the term is up 2 or 3 times, he's going to be still in. Although I will tell you, it was very interesting. He's aging, and I don't know how old he is. He's aging badly.
Who?
Powell, he looks freaking so old. It's unbelievable. He is taking a lot of heat here and he's aging. So I don't even know if he wants the job anymore. But, if he kowtows to Trump, why would Trump want to take him out of office? I mean, I don't see it. Maybe he stays. You never know. Um, listen, Trump calls everyone names, so don't worry about that part. And if he starts doing what he wants, maybe he'll be in a position to stay. So, you know,
I don't know,
we'll,
the
we'll
Fed governors look pretty divided. You look at the dot plot, I think it's 50-50 um, between those who think we should have rate cuts this year and those that think we shouldn't.
Well, listen, we're going to get a whole slew of numbers coming into the end of the month. So, we're going to get PCE again. We're going to get CPI, PPI. We're going to get, Michigan. We're going to get every number for the month. So he's going to have a slew of numbers to look at. He's going to see what's going on, and potentially he may make the move, but we'll see. I know we got a little sidetracked today.
Cutting rates into an all-time high market. That's pretty crazy.
Happened before. It's happened before. Trust me, it's happened before. Where you sit there and go, I can't believe they're cutting rates and the market's at an all-time high. I mean, I can't believe that we're at 6,200 or even above 6,000. I mean, we blew. I mean, the market was up 6% last week. I mean, that's a great year. I mean, I
The
just
truth is, it's all AI. It's the AI portion of earnings that are driving things forward, continue to be driving things forward. You take that out, all the other sectors.
listen, I don't even understand AI. I mean, I'm using AI for a lot of my products, and we have a Larry AI avatar, which maybe I'll bring him on the show one day. But like we're
Uh,
paying like $50 to make the avatar. Okay. So I don't see where the money is coming from. I don't want to get into a discussion about it because we're late and I want to get close to wrapping. But we can do that tomorrow, but I don't see where the money is coming in, the billions and trillions in AI. And they call Nvidia like an AI company. Nvidia is a chip company, just making chips for all these companies that are extending out their AI and trying to get in AI, and everybody is in AI. So, markets are a little bit
well, my
polluted.
point is, you take those out, then yeah, the market wouldn't be anywhere near here, and it just continues. The actual earnings growth, I mean, that's fundamental.
I
That's
don't
not.
know. I see tertiary stock or second or third tier stock starting to move.
Yep.
We have a position in Affirmed, which is a buy now, pay never, or pay later. And that thing has broken out here. What else? Coinbase went crazy. I mean, there is a lot of stocks here that have gone ballistic.
At the same
Outside of
time,
the
hype stocks like Circle have dropped off.
Dude, they're still insane. I mean, come on.
Yeah, that's true.
It's
That's true.
ridiculous. But anyway, let's just wrap here. Bonds have a little bit of a bid. The one that we didn't talk about today, which we always talk about, is currencies. Dollar is weak again, not heavily weak, but a little bit weak. It's every day. Oil trending a little bit lower, but a no trade at 65. And we are shorting gold in full disclosure on the opening for pretty much all products. So we're going to have a gold short by tomorrow. And I wish
25 point straddle pre-open. What do you think?
I think it's a buy. I'm not selling that. I can't sell that. Too low. I mean, what's going to happen? We're going to be a $7,000 instrument, and then you're going to have a 20-point straddle,
You
8,000. I mean,
you can't sell a 25 point straddle. I agree.
it's just way too low. I
You
mean, it
got
may
to wait for the
work,
market
but
to
it's
do
way
something.
too low. You're coming into month end. You can sell put or call spreads, but you just have to be so right on direction
I
because
know.
you're not giving up. There's no room, to be wrong. So you got to be careful. And this is something that I want to leave everybody with. And we I think discussed a lot today, but I just think in trading, you got to have patience. Okay. If you can have patience, you will be okay. I know, you know, a 2 month snippet is longer than we want, or a month and a half, but overall in a period of a year it's just a little piece. So just everybody hang in, just wait it out, and there'll be money raining on the table. And I want to wrap, so I don't know if you want to say anything on the out, but I'm done. Pretty much we covered a lot of stuff, and we'll be back to everyone tomorrow. But I don't know if since you're so bullish, why don't you leave us with a bullish rhyme?
I don't know. Look, I'm bullish until I'm not, and I'm just looking at a lot of similarities in 2018 and this year, uh, all the way down to the fact that I think at the end of the year it's going to be just like it was in 2018. It's going to be Trump versus Powell, and I think for this year it adds a little bit of Shakespearean irony to it because Powell's going to be out the door, and we're going to have that kind of soap opera in the market. I think at the end of the year, the market has recovered. Tariffs have recovered. Anything you can, wars,
Well, I'm gonna leave it.
deglobalization. The market doesn't care, but what the market will care about is a Fed that might not want to cut rates like everyone thinks at the end of the year.
Listen, I don't think it's coming down the way you do, where it's going to come down to the Fed. I think things are going to happen way before that. But all I'm asking you to do, dude, and I can already see it. I got a premonition. Okay, we're going to get tasered in the market, and you're going to come on and say you're short. So the only thing I'm asking you before that happens, okay, because you very rarely are ever wrong. Just
Right.
let our people know beforehand when you decide that you're not bullish. So tomorrow when we come on and the
But you'll
market,
see. You'll see my alerts, right?
okay,
You get
well,
my alerts.
listen,
You'll see them.
well,
You'll see.
when the market closes down 70 today, I don't want you coming on tomorrow saying,
And
I
I
told
caught the
everybody
whole
to
move.
get out.
I caught the
So,
whole move. Okay.
okay. Well, listen, I wish everybody good luck trading. Peace. Enjoy the day. And we'll be back tomorrow. Same bat time, same bat channel. Enjoy.